Hi, everyone. It's Grant Abbott speaking, and welcome to the next step in our succession and asset protection estate planning space. And this one relates primarily to the asset protection and really came about, from my perspective, with the licensing side of things. In fact, I remember my first foray. I did tax and a master's of law, and I was a research, this is going back a while ago, I was a research director at the Tax Institute of Australia, which many of you probably heard of, and I was a state counsellor, and after my 2-year stint as research director, after I got my master's of law, I was feted by all the legal firms and the accounting firms, and ended up going to KPMG. And I thought I was a bit of a bigwig, as you would. I've got a master's of law, and I've written submissions for the business review of businesses way back in 1988. I made a whole lot of submissions for the Tax Institute, which was great. Anyway, lob into KPMG, and I was put in under a bloke called, what was his name? Rob. It'll come to me. But he was amazing. He did a lot of banking transactions. And the first letter of advice I had to give was to the South Australian state government. And effectively what they were doing was selling their telephone poles to a special purpose vehicle and then leasing them back. That was probably one of the first forays I had in terms of actually looking at the finance or the securitization of assets. And it was a bit of a shock because I thought I did a brilliant letter, but came back and the 10 pages I did, all just had huge, big red crosses over them. So it was like, welcome to the big boys here. So that was interesting, but the licensing solution that we're going to be looking at today is much the same. And full credit to Tim. Thank you very much for poking your head in here. And certainly when we get back, and I'll be talking about a combined solution, a strategy automation, a little project management tool we'll be delivering in the next couple of weeks, which will be a assignment of property over to a family protection trust, which I'll show you all this today anyway, and then a license back. So the purpose there is obviously to get it off the balance sheet of the vehicle that really holds all the risk, and putting it into a risk-free, or as best as possible, risk-free structure. And I know Tim's been telling you about this for such a long time, but again, it's very difficult to build solutions. And of course, I love to challenge myself. In fact, last night we sat down with Tim, and I came up with, and Tim as well, we've come up with a whole roadmap of quite what I believe are revolutionary asset protection products, which will really change the shape of the accounting world going forward. So for those of you who are here, you'll start to see now with LightYear Docs, we've now gone and built all our standard documentation, our standard companies. We've done our trusts, our discretionary trusts, unit trusts, our fixed trust for New South Wales, much the same as anywhere else. But now what we're doing is going into that higher level space. So if I have a look at that succession asset protection estate planning space on a scale of 1 to 10, just the pure documents are probably around about a 1 or a 2, because everyone's got access to documents. You can go anywhere, but it's putting them together into a coherent and, more importantly, compliant strategy quickly, easily, and effectively, which is the real key. So if you don't know what you don't know, if you don't know the flow of the documentation to put in this place, because as I said, you could essentially, when we get our combined solution, it'll be assignment of property, and then will be a license back of that property, if you want to do that. Or you'll see as we come down the track, a licensing solution. But if you don't know what you don't know, then you're really pushing up against it. But I would say, along with the protector, this solution is almost mandatory for every business. So we want to go through that. And as I said, Tim will start to package up some front end communications or comms for clients. And then we'll release it, go through a whole lot of strategies and ideas around that later on down the track. But I want to show you the licensing solution, give you a few ideas around it, what to do, and then I'll just jump in and show you where it is. Believe it or not, it was only just completed, built into our back-end system only about 15 minutes ago, and I've tested it. And just to show you, I only gave it to our guy yesterday because I did have a license agreement from many years ago. However, when I had a look at it, it's a licensing agreement we use for our 5-year licensees from the LightYear Docs to accountants or advisors or planners who use it. So I had to cut it back and make quite significant changes, but it's a very, very robust licensing agreement. And I know that because it actually cost, when I used it in the past, it cost me $25,000 for it to pay legal fees. So it's pretty good, but I got the proprietary rights to it. So anyway, let's go through. Really, you're going to hear me talk about this, more and more, but it is all about protecting that family wealth, using succession strategies. And, yesterday, if you weren't able to get to the leading member series, I'll send out the details on that for you when you get this recording today. But really, we're starting to get into a whole brand new space here. Succession, asset protection, and bloodline planning. Today is obviously about asset protection and bloodline planning, believe it or not. So I went through this yesterday, and it's fairly typical, the start for all of us, and I'll keep on putting this into your mind because we need to go from where we are, which is unconscious, where we are at the moment, which is conscious incompetence, which is, we've seen it, we don't really know how to put it all together to get ourselves up to conscious competence. As I said before, we've formed the association, and both Tim and Michael are down at the Gold Coast having a chat about it at the moment, the Succession Asset Protection Estate Planning Advisors Association. And you might have seen a bit of trade press around it. We've now got a full board of 6 people, so we're doing it well from the start. We've done our competency standards, which will be going out for review shortly. And then I'm really hoping that by the end of March that we will have a 3-day series workshop which will provide accreditation for all of those of you who attend and get through the assessment, so that post that date you'll have a nomination or a designation from SAPEPA, which is the Succession Asset Protection Estate Planning Advisors Association, and you'll be able to use that designation, and then you'll also be able to put the diploma on your wall. In fact, it won't be a diploma, it'll be an accreditation because it's actually set at a postgraduate level. But we start on the right-hand side, and I'm just going to talk in terms of licensing. So we need to have that line of succession. I went through this yesterday. We have our leading member, or if you're using a family protection trust, our family protection appointor, leading member appointor if it's a leading member trust. If something happens to them, it passes down to the next leading member or family protection appointor, and so on down the track. That line of succession is all important because that second one you see there, if the leading member is our client, let's say it's John Smith in this instance, and John Smith's the appointer of the discretionary trust and is just a member and trustee of the SMSF, then essentially we'll make John Smith the leading member appointor for the discretionary trust, which is pretty easy. So you saw how easy it was for me to upgrade both the SMSF and the discretionary trust yesterday. And bearing in mind, the best thing for this is always to do it in the Moat Castle. That is your ultimate project management system. So that the second in line for control is, in that instance, I put Max Smith, his son, rather than his spouse. Now, you can have joint leading members, but that's dangerous just in case there's a divorce. So I've put down there the son. It could well be the spouse is number 2 and Max, the son, is number 3, because you can always remove, the existing leading member can always remove and change around those leading member appointors, family protection appointors, and leading members in the SMSF. So, but the important thing is there in that line of succession, that leading member number 2, which was Max Smith, effectively, in the event that something happens to John Smith, leading member number 1, whether it's death, divorce, incapacity, bankruptcy, or just simply doesn't want to do it anymore, that baton is handed down to Max. And you've seen there in terms of the trustee companies and those 3 entities, FPT, SMSF and DT, automatically John's shares are cancelled and new shares are issued in Max's name. So he now controls the trustee company. And likewise, he's the appointor, the chairman of the trustee company, with the all-powering veto vote, which is absolutely crucial. He'll also be the executor of John Smith's estate and also his power of attorney. So really that person there, that number 2, is all powerful. And that's what I was working through with Tim yesterday on how to, particularly with an FPT, if we're putting a lot of our net wealth over there, our equity, how to ensure that it can be left in more of a fixed style of trust. And yeah, I'm working on it. So I've got it in my mind. It's going to be pretty exciting. So that's where we're looking at the moment. So that's your typical structure, and I'll keep on reverting to you. I think the important thing here is if we have a look at accountants providing documents, and particularly, I mean, gosh, I remember getting my first ever shelf company, years and years ago, even with when we had a look at when I was at KPMG, before that Jeffriess for a short period of time. We used to get shelf companies, so they were provided, I think, by ASIC at that time. It was still around, and essentially accountants have always, got shelf companies. Obviously, online started in 2000, I think 2001, and we started buying companies online. We then started to buy trusts online. We then got self-managed super funds online. And then it suddenly ballooned, then trust distribution minutes online, and then SMSF investment strategies, contributions, reserves. So we can keep on going up that chain. And as I said before, with LightYear Docs, we've got we've now got 120 documents on there. So there's really not much that we don't have on there. Things like, for example, lost deeds, for example, a renunciation of distributions from a family trust or an estate for social security purposes. Some of those sort of documents are really, or deed rectifications, ratifications, are not really, you can't really put those on the site because they're more the provision of a legal service. They're not just a data capture. You need to insert additional information. Whereas everything else is essentially signed off by Abbott-Family. So this license agreement we've got now, I'll take it over, and then we get Tony Animals to sign it off, and then it'll go up on the site probably tomorrow or possibly Monday. So that when we go through that process, we're now moving beyond the basics, because the basics have been done now for 20 years, and I still love accountants saying, but isn't this legal work? And then you say, well, haven't you been ordering online companies for ever and a day in a trust? So what's happened is we're just a little bit different, because we're taking that next level up and coming to you with super valuable solutions in that asset protection space, which we'll get into. So the area here, though, is that you'll see there on that innovator side, you've got obviously myself, Tim as well. We're the super enthusiasts. We're innovating, building new stuff. I mean, this licensing, how many places do you know where you can actually get a really good, robust licensing agreement? Remember, this cost me $25,000. And for those of you as subscribers, it's just par of the course. So when we get down there, we've got the innovators. I know Michael Jeffriess is also in that case with employee share plans. And then you can see your practice. You guys are the visionaries. So you're coming along on the ride for us. And I would credit where credit's due. I know Tim comes on all of these sessions where it's possible, as does Michael. And that's absolutely crucial for us, because at the end of the day, we all have a look at this new stuff. When you come on a training session with me, you're not going to get any rubbish. We're getting right down to the fact of why we're using it, when we're using it, where does it fit in, etc. Tim's probably better to do that face-to-face on what you can charge for it. but we'll go through that. So you're really that early adopters. And if you're an accounting firm, there's around about 12,000 accounting firms in Australia. And if you think about it, the early adopters are around about 13 or 14% of those. So, you're looking at around about maybe, 2,000 accounting firms who really take this sort of stuff up, which we believe at LightYear Docs, we're going to have huge growth potential because we've got now just over 100 strategist members who are really starting to move here, and we're picking up a lot from Now Infinity. So your practice is going to be there, and it's going to be right at the stage before everyone else gets there, and it's going to really make a huge shape, a different change to you. And once you get that accreditation from SEPEPA, you're really going to be able to go out and completely feel confident that stage where you're going to be what we call consciously competent, which is 3 C's. Consciously competent equals confidence. So you're going to have huge confidence in going through this process. Just on one thing here, if you don't mind me elaborating, if we're doing our moat and our castle, and in the long run, we're going to build all of this, so that, for example, if we've got houses, investment properties, other stuff, we pull out of we keep the legal title in our client's name, which be, say, John Smith, but the net equity is going over to that family protection trust. At the end of the day, we end up with what we call a very clean, the legal term is actually a straw man estate plan. So I know a lot of you are concerned because you're happy to do trusts online, you're happy to do companies online, you're happy to do SMSFs online, you're happy to do minutes online, etc. But you just really, enduring powers of attorney, you shouldn't be worried about that because they all come from the various state bodies. So they're pretty easy to do as advanced healthcare directives and guardianships. But a lot of you are really concerned about wills. And can I just put it to you this way? Although we've got a wills solution there, a lot of lawyers do basic wills for $400 or $500. They'll obviously try and upsell your clients into testamentary trust because they can charge $2,000 for that. Notwithstanding that you've seen how easy it is to create a testamentary trust on our platform. One of the things there is I want to get at is that if we've done our asset protection, our structuring right, and effectively we have created that family protection trust as a inter vivos estate planning trust. So it's a distribution of our assets prior to our death. Then if our estate is pretty clean, then essentially what we've done is we're knocking on the head any family provisions claim. You will have to, and I will come down a little bit later on in terms of the notional estate in New South Wales, but everywhere else you've got complete protection, which means that, if your client wants to go off to a solicitor and buy a $500 will, absolutely let them go, because at the end of the day, if we manage that process, there's not going to be much left in there. And then you're going to feel a lot more comfortable around it. But we'll talk about that a little later on. So what is licensing? Well, essentially most of you, if you've got franchise clients, you know what a license is. Now, a franchise is different from licensing. So for example, I could license my logo. If I get a McDonald's franchise, then I get the right to use their logo, the big golden arches. They give me business processes and methods, which I have to complete. So for example, I'd actually breach my franchise agreement if, for example, I decided to put pineapple on a Big Mac. In fact, it's probably a good idea to put a pineapple on a Big Mac, but I'd breach it. So there's a very tight set of conditions. But McDonald's has a whole lot of things that are wrapped up in their business, which would include marketing processes, business processes, and the business process is, for example, getting the buns, getting the meat, putting it all together in a certain package. Marketing, obviously, is a very big one for McDonald's. So when you have a look at that, we've got a business that is broken down into various items of property. When we have a look at intellectual property itself, essentially what I've done here is the creation of this licensing agreement is intellectual property per se. Now, when I'm creating it now, I'm creating it on behalf of Abbott-Family, which then is used by LightYear Docs as well. So it's actually a bit of both, but essentially it's the license or the intellectual property is owned by LightYear Docs, which is pretty crucial. So, for example, I did a lot of documents on Now Infinity, but obviously when I left Now Infinity, I couldn't use the documents anymore because I created them when I was at Now Infinity, which is good because it means that the last 2 years or 2.5 years, I've been working my butt off building all the documents inside the system. So at least you know that they're all fresh, got fresh eyes and all that. They're not just band-aided versions. And I've seen some pretty big legal firms around who profess to be SMSF gurus, and they're still running a deed that is over 20 years old, 25 years old. So a franchise is a licensing agreement whereby a franchisee pays a fee to a franchisor for the rights to set up a business using a franchise's brand name and business marketing systems. So all of us, when you have a look at it, even in your own business, you've got a whole lot of businesses and processes and marketing systems. Some are better than others that can be built out. And I'll talk about a couple a little bit later on. But most importantly, all of those are wrapped up into what we call goodwill. And really, at the end of the day, if I had someone coming in and buying my business and I sold them the goodwill of my practice for, say, $1 million, but I kept all the, if I kept all the business processes, the logos, the trademarks and all that, what goodwill would they be buying? Because effectively, if I own all that property, then I can go out, provided there's no restrained trade, I can go out and license it to someone else, or effectively I can go and start up another brand new business on it. So the goodwill they've got is probably just the existing clients. And it's interesting, if you do go and sell the business, the majority of the money that, if we have a look at it, let's say that, actually I'll come through, but if the business owns the property now and you start to delineate it, logo, trademark, business process, this process, marketing process, so on, and then we shift it over by way of an assignment of property. If you didn't see that, we launched that earlier this year in January. So we assign the property over to, say, a family protection trust, which is a risk-free structure. Then in that instance, what will happen is if someone buys our business, they're actually going to be paying the family protection trust, not necessarily your discretionary trust. So it's a good way of shifting value as well as asset protection. So for me, I think it's absolutely crucial for it. And once you get the gist of it and you start to break it down, and you put that in the document, then you're going to find it's very easy to work out and determine a value for each of those component parts. And of course, then you end up with a total value, which is like a franchise. So what can you license? As I said, you can't license goodwill because goodwill is really nothing. It's an aggregation of a whole lot of business processes, clients, etc. But if I took all those business processes away, marketing, logos and that, then within a month, your clients have just run away. Can you imagine? And you've probably seen it. There hasn't been that many, but I remember there was a McDonald's franchise. I think it was up in Fairlight. And they ended up getting rid of that franchise because they put another McDonald's franchise down on the Manly Corso. Then someone else came and opened up a hamburger shop there, but couldn't use any of the McDonald's. Started off really well, but within probably 2 to 3 months, it ended up going broke. And it's now like I think it's an apartment building, which probably made a lot more money for them anyway. So any trademarks, on trademarks, you can go to, I think it's Australian Intellectual Property, but there's a government search you can do on trademarks. You can actually do trademarks yourself. So most of you may not know, for example, you can actually trademark words, for example, we're currently in the process of trademarking the words leading member. So that will apply to obviously legal documents, business processes, etc. So LightYear Docs will have that term leading member, and as it becomes bigger and bigger, and we go up their scale, so that if you look in 4 or 5 years' time, these pragmatists, which are the slower ones to move, they'll start to be using this leading member concept because it is so revolutionary. You guys see it because guess what? You're visionaries. They don't see it yet because they're still stuck in the weeds. These guys down here, the laggards, they're still getting, they've still got their office filled with folders, with paper companies and all that. They're the ones that were really hardest hit when COVID came around, because everything was possibly paper and sitting on a server in their office. So, we're moving to that track. You guys are the visionaries. Again, have a look at it in your own business. Has your logo been trademarked? What words have you got? If you've got some idea around your business that's really catchy, for example, the protector, is that worthwhile going and trademarked? Copyright, obviously anything that I write or put up there for LightYear Docs, copyright. Patents, you can get design patents. So for example, we're looking at patenting our strategy automation system. You'll find I'm working on the Moat and the Castle to add spouse SMSF wills, and also EPOAs. And that will take it out to potentially a 48 document offering. And if we start doing that, once you take into account successor directors, you take into account obviously the protectors, etc. And we'll also be able to do multiple protectors under that as well. So it's going to be a huge beast, but again, it's a one-stop shop for each of your clients. I would always, if I had a new client now that had an existing, if it looked like this, if it looked like that, had a discretionary trust and SMSF, they had a house or property outside, the first thing that I would do is straight away go to a Moat and Castle, rather than trying to build the constituent parts, because otherwise you're going to have to enter common parties. It's just too painful. I tried it once and hated it. That's why I built that process. All your marketing processes. So, what do you use? Do you use MailChimp? Do you send letters out? All of those are pretty valuable if you've got the right. Business processes again. So if you have a look at marketing processes and copyright, Change GPS has got huge amounts there in terms of the letters, the stuff that they do. Business processes, software that you use, how you use it, importantly. Any manuals you have, you're going to have an employee manual, believe it or not. That does have some intrinsic value. And of course, the big one for me is the database. Most people don't recognize the value of your database. The clients that you have there, obviously you might have the A clients, B clients, C clients, but it's all part of your database. And that's where the real value is, because if, for example, you've got an A client, then that communications ability you've got with them really makes quite a significant difference for it. So database to me is all important. Even if you had, for example, LinkedIn, I've got 10,000, I think 11,000 followers now on LinkedIn. Not that I use it, or I know our office uses it quite a bit. But again, I can pull that information, or I used to be able to pull that information into email database. And again, that's been pretty valuable for me. So again, all of these things you can license. Anything that is property essentially can be licensed. If it's real property, which is obviously land, or something physical, then what we do is we lease it. Does that make sense? So if I've got a property, residential property, I lease it. If I've got a motor vehicle, I lease it. And if I've got a car, a truck, I lease it. Computer, I lease or rent it. Either one doesn't make any difference. Whereas when I get something that's ephemeral, or that I can't necessarily put down, it's more intellectual property. And remember, marketing is intellectual property, or intellectual capital per se. Then that's a license. So that's the difference between the two. So for example, if you have a look at a McDonald's, with the properties, there'd be licensing payment. So there'd be lease payments for the equipment, lease payments for the property itself. And then obviously then there's a whole lot of licensing payments as well. Okay, so typically this is the way that the transaction is going to be structured for yourself. So again, if I just go back to our top diagram here, we've got our discretionary trust here that's running the business. We've got our bucket company, we've got our trading company. We're going to change all of that obviously to a leading member discretionary trust, and obviously change that to a special purpose leading member discretionary trustee company. But we've still got, with our business, clients in our business, we may end up getting sued. There might be creditor actions against us. So Look, you just don't know what you don't know. So there's inherent risk in there, but we've got all this money pouring in there, which means that it's a very dangerous beast. And if all my IP's there, then if I get sued or get attacked, and look, this could just be through the family law court or whatever, then in that instance, that whole business can grind to a halt, whereas we need to have that flexibility and that asset protection. So what we're doing here is we're looking at, well, hold on, we've got property here. We identify the property, we work out a valuation, and then we assign it over to the Family Protection Trust. Does that make sense? So we assign the property over there, and then we license it back to that discretionary trust, which is important. It also means if something goes wrong there with that discretionary trust, we can actually wipe that out, set up another trading entity, and virtually start business again, because we hold all that all that property in that Family Protection Trust. So there's a lot of business protection in there as well as asset protection. So you can see why I know Tim uses it a lot, and certainly, from my perspective, all governments do the same thing. They get those telephone lines, can you believe it? Not the lines, the power lines, off their balance sheet. It makes them a quick quick money. Then effectively, from that perspective, they also have an ability, once they get the money, then they've got a long-term lease fee to be paid, because again, a power line is a piece of property that you can touch and feel, and as a consequence of that, it's a lease fee rather than license fee. So when we start off, first off is setting up that Family Protection Trust. And I would say that, this is part of if you're going down this track, you would be using the Moat and Castle and starting off with either the protector or starting off with this strategy. It doesn't matter, but you set up the Family Protection Trust and the Family Protection Company, which again, they're both the same thing as leading member. They're just different names, that's all. So you can do either or if you want to set up a brand new structure, or you could just have a Family Protection Company. The difference between the two, as you would have found out yesterday, is that really the beneficiaries flow from the bloodline of the Family Protection appointor. So anyway, if we do the protector, we've got a gift of a promissory note in there. Let's say it's equivalent to cash. So we've just got really a cash box that's sitting in there. That cash is then lent back to our individuals. Now, what we've got here is we're talking about business. So I can go through. So the step one is to set all of this up. Step two is to identify the licensable property. Now, remember, if you want to go down the track and you've got things, for example, motor vehicles, equipment, etc., that's owned in the trading company or trust, you can still assign the property over, and you'll find that document, I'll show you where that is a little bit later on. And then we would use the equipment or motor vehicle lease back. Here, we're looking for licensable property. So in this instance, in my trading company or trust, I've got a trademark, which is valued, I've worked out the value at 50,000, marketing processes of 40, database, I reckon is worth 500. And then we've got a LightYear Docs license sitting in there. So whatever that's worth, I'm going to show you a little bit later on. So we've got step two there is identifying it. So step three is then to do an assignment of property for that. And if you haven't seen that, I'll send a link through that assignment of property webinar that I gave. And then, of course, we're looking at step four, which is the licensing back from the Family Protection Trust to the trading company or trust. So it all sounds good, but there's a couple of little things that we need to look at. First off is if we go back and we have a look here, how did that property actually get in there? So, for example, with myself, with the name LightYear Docs, that came up when I was employed by I Love SMSF. So it all got wrapped up into one, which is the LightYear group. All the business processes, all the documents I've done now all fit in there because I've been employed by that group. I'm not a contractor and selling it in. But you'll have that for your clients. But some of your clients may have actually put trademarks in. They might have put marketing processes in. They might have already had them, and then they've gone and put them in there, but they haven't recognized the value. So not a bad little idea to think about it in terms of doing a assignment of that property, but taking it back to the year in which that assignment was made. Now, the only issue about that is that obviously you're going to do it for value. Here you can see it's, if we take the LightYear Docs license out, that's $590,000. So there's obviously going to be a CGT issue for that. If you're a small business taxpayer, then you're obviously going to get the 50% discount, the ordinary one, then another 50%. So then it's just going to be the other 25%. You might be able to use that $500,000 CGT exemption potentially. So when we have a look at that, it's not a bad idea, because then we'd end up, and it's much the same thing as putting money into that business and not having registered as a loan. So if we put that money in, then I would then have also a transfer in and a loan agreement back out. And then I would secure that, do a PPSR over those assets as well. And you can see now you can do PPSR over each and every one of those assets. So that now the company owes me and I'm a secured creditor for that, which is good. And if I want to, if you're smart, guess what you would do? You would then get that loan agreement, and what would you do? I would then assign that over to the Family Protection Trust. Does that make sense? I'd assign it over to the Family Protection Trust. And again, once it goes over there, if there's underlying interest and loan payments, that would go over to that Family Protection Trust. Alternatively, yeah, so that's probably the best thing that you do there. So what we want to do is look at that license. As I said, is if you've got some issues with Div 7A, particularly that lobbing that stuff in, we could probably make a bit of a cut of into our Div 7A issues if we can find that property that originally went in there. But if it's been created already, they're employed as a director or whatever by the trading company or trust, it's created there by them, which is interesting. I've always thought as well that because it's quite ephemeral, for example, let's say, forget about LightYear Docs, but I come up with a brand new idea and it's going to call, Blobbo. And if I got Blobbo, is that mine? Is that Grant Abbott who's doing Blobbo? Do I own it? Is it LightYear Docs? Or can I actually say it's owned by my self-managed super fund? I'm acting as a trustee and creating it. Again, just one of those ideas we start to think about, because obviously the best thing I'd like, and look, it depends on what you're doing. The best thing to do it is, if you can have IP, it'll be in a self-managed super fund and licensing it back. The only problem is if it's already in existence, whether it's in your name or it's in the trading company name, you can't transfer it in because of Section 66, transfer of property to a related party, because it's not business real property. Anyway, so there's potentially CG transfer in, and obviously here, when we transfer that over, there's going to be capital gains tax issues there. We can write those values down if we want, and that's fair enough, and then build them up. But we do need to look at whatever the market value is. But I said it's not a bad idea, because once it goes over, it depends. If it's in a trading company, obviously you miss out on that CGT. But certainly if it's a trust, then we can take advantage of those CGT concessions. If we go down and having a look at creating, acquiring licensable property, then probably the best thing to do is in the Family Protection Trust right from the start. Rather than doing it here, do it over there. And look, you can have an agreement between the two that, if this holds all the property, then any property is created, it's going to be over here, and then it's going to be licensed. And you'll see that with the licensing agreement, that even if these guys make changes, or this entity makes changes to any of the licensed property, then this actually becomes the property of the Family Protection Trust. So I'm making sure I'm loading it all into this non-risk structure. So hopefully that makes a bit of sense. So when we go down and have a look, I'll just show you how we've used it in practice to give you an idea. A lot of our members or our strategist members pay on a month-by-month basis. But you can, some people pay annually, so then they get a good discount on that. Smarter ones will go into a 5-year license. So the 5-year license would go into a special purpose trust if you want, and then it would be licensed back to the trading company or trust, again, because it's a brand new thing. Now, from that perspective is what we have seen, I'm talking about, once we start looking at all this, we can then start to go back here and we can start to say, okay, well, let's innovate. Let's build, the Div 7A issue I talked about, or the loan issues. They're just another little layer on top for us to really add a huge amount of value to our strategy. And really, when it comes around to pricing, the value is all important that we've created. So in this instance, we can have a unit trust for SMSFs and also a family trust. So that if it was just Smith SMSF owning it, then obviously that'd be an in-house asset. But if two business partners, accounting partners or planning partners or whatever, have their own entities, whether it's a family trust or them personally, you can use a unit trust. So we'd call that a licensing unit trust, or we've created quite a few of those. And then essentially what happens is then the trading company or trust is able to go into LightYear Docs platform, prepare those documents, and then each month you can see here, I've just got it very small, but there's a listing of the documents that have actually been prepared and the costings there. So let me just see. So if you go through that, and then obviously the trading company or trust will pay that fee over there, which is quite useful, obviously, if you've got self-managed super funds underneath. But that just shows you what a simple license can do and what it can be used for. So there's really, it's a matter now of if you start from that level of being, remember, unconsciously incompetent, well, you won't even think of licensing. The next level up is that conscious incompetence, which is you sort of know it, but you're too scared of it. Where we're going now as we're getting into that conscious competence is we understand the licensing, we understand the property. And really, when you start to look at clients, companies and businesses, you've got goodwill, but you can break it down into multiple processes, systems, etc., and start to look at, well, can that be transferred into a family protection trust? And what's the value out of it? Well, the value is it's going into quite a separate vehicle. Asset protection, it's also super valuable when it comes around to family provisions claims, passing it on to the estate, etc. So I can think about like 5 or 6 different benefits from that assignment over. And then the license back, or even just creating or buying. If you're going to buy something, buy it in a family protection trust and license it back. So these are the sort of things we can add to our client. If you've got any issues, obviously, or you're coming up to a client's got a business acquisition or whatever, then it's important just to have a chat with us at LightYear Docs, go on the support, and we'll have a good look at it and say, well, maybe you should look at it this way or that way. Again, that's part of your subscription. So we'll finance it probably tomorrow. It just depends. We need to get signed off from Abbott-Family first. So once it's completed, it'll be probably Monday. It'll be up and running. You're going to find it in the business and commercial agreements. You can see there's a deed of assignment of property. That's already on that for most of your strategists, so don't worry about the costing there. And then what you'll see is on Monday, there'll be another one there, which is license of property. And so that will be sitting in there. Next one is, as I said, is that in hopefully a short period of time, I know Tim's working a lot on tax, but we'll come out with that, this strategy here, which will actually all be automated, which will be a transfer of the property over, working out the valuation of the transfer there, and then sending it back. I'll also have an optional loan agreement in there as well. So we may well be that the Family Protection Trust owes the individual there. And of course, we can work on that as well. From that perspective, let's just go out and have a look at what we've got. So I'm working in our hub. You can see here, this is our Hot Dogs hub. If you have a look at it, and I just pull up, I go into our site, you're going to have a look. We are going down a track of quite a massive upgrade of our system. Just it enables us to pull a lot more APIs. The Hot Docs, it's fantastic and used by over 1 million legal firms around the world. It's got, doing 10 million documents an hour. But from that perspective, it just hasn't kept up the pace with our APIs. So with that one, we're going to be in a position of really making a huge difference there for us. So if I have a look one here, change GPS day, what have I got there? Oh, there you go, the Moat in the Castle. So when I relaunch that, you can see we've got our outer framework, but within the frame here is our hot docs, and our new system's going to look like it's 10 times better than this. But again, I don't mind it because it's hardcore. It's like having, for you guys, it's like having a legal office within your business because you're using the same stuff as Abbott-Family is using. So you can see there that framework. And then if I take you in here, it's exactly the same framework because I'm going to relaunch the interview, and you're not going to be surprised because when it pops out, we've got our interview there. So you can see how that looks the same as that there, but we've just got a nice frame around it. The next system we'll go to obviously will be so much better. So we put in there it's a licensing agreement and support agreement. So you can't just flick over license. You need to think about support. You don't need to put it in there, but we need to think about through what we're going. You can use your own logo tag or the Abbott-Family tag. The licensor, in this instance, I've got the Family Protection Trust. I'm assuming there it's either new property that's in there or licensed property, or more importantly, it's been transferred over from a discretionary trust or a company. So we've already done that assignment of property. Remember that deed of assignment of property. So the licensor is the Family Protection Trust. The licensee is going to be our trading company or our trading trust or whatever we've got. Mind you, we could have the licensor potentially being an SMSF. Again, for that, you just need to have a look at whether you're running a business, and it's not an issue. The Commissioner's got guidelines that SMSF can run a business, but we just need to make sure we de-risk it. In fact, if we can do it, it'd be great. So we go through the process, the date of agreement. I've got it sitting tomorrow, New South Wales. How long was the initial period? So again, this is much the same as a commercial lease, a residential lease. We have it for a period. Here it's going to be 5 years, particularly if it's between related entities. You might want to do it 10 years, 20 years. When does the contract commence? So I've got the same date as the agreement. And then when does it finish? So if you know it's the 12th of that, all you have to do is here. See this, how it takes it through by years. So it's 5 years, then you just need to count out 5. And then you can put in there no, or you can put in there a further option. So here we're going to have an additional 5 years. So it's a 5-year option. Conditions and license. So are there any conditions around that? And we can put, for example, it can be used only in South Australia, it can only be used here, or you can do that. So you might want to put, there's a lot of terms and conditions, legalese inside there, but it's the same as, for example, a commercial lease. What can you do? What can't you do? Got to, all that thing about keeping it in repute, no disrepute, that's all built into the agreement anyway. So these are just any additional conditions. The licensed property, remember we're going back here and we're working out, well, what's the licensed property that we're talking about? There we go. So what's the licensed property? So we go back in and we've got the logo here, Sharkbait, database of 10,000 LinkedIn followers, database of 3,000 customers, trademark and business process manuals, and you can just keep on going down the track. Now with the fees, what we do there is what's the initial fee? So we may pay an upfront fee, which might be, for example, that's what happens with McDonald's, the date that fee is payable. And then is there any ongoing fees? So I'll tidy up a little bit of this wording around here to make it more easily to understand. But the ongoing license fee, is it monthly, or is it quarterly or annually? And that's for the license and also the support services. And then all you have to do is just put in there, for example, $2,000 a month. Is there any other fee that's been paid? If you want, then you just chuck that in there. And then support services, so technical and marketing support, whatever's going to be relevant to the client. So once you build out or you find out what this is here, it's going to be pretty easy to determine what the support services is. And particularly if we're doing it through related parties, we want to go through there. So once we've got that, then we basically just produce it and then we're off and running. Now, what I've done here is I've done, this agreement was just done up a little while ago. So you can see here, we end up with the license and support agreement between the Family Protection Trust and the licensee, being the trading company. We have our disclaimer there. I'll just bring you through a few of the important issues from our perspective. The agreement terms and conditions, we've got the licensor, the licensee. The licensor is a proprietary owner of licensed property and seeks to make its licensed property available for license to licensee. This agreement sets out the terms and conditions under which the licensor will make licensee property available to the licensee to provide support services for a period of 5 years starting on the 12th of February 2020, ending on 11th of February 2026, with a further 5-year option at the licensee's request. So that's essentially the guts of what we're doing. We go down and have a look at the definitions. I won't spend a huge amount of time on here. Force majeure event, I've actually now gone into all our documents, so we now include pandemics in there. If you want that force majeure, interpretations, let's go down. So the term here is agreement commences on this. One of the things, don't worry about the highlighted there. It's just, I need to that's just to go to my developer. There needs to be a date put into the interview, or what do we call our wizard, as to when they can exercise, what's the last day you can exercise that 5-year option. So it should probably be around about 10th of February 2026. So the licensor grants the license subject to the following conditions. If you don't write anything in there, then it'll come up just conditions as per agreement. But if you put in additional conditions, then it'll come down as bullet points. Support services, so you'll find those at the back end. You've got the licensee's options, the warranties by the licensor that complies with all applicable laws, same with the licensee. The licensee complies. We've got the fees, so initial, monthly and support services if need be. We've got here on each anniversary, the licensor may increase the fees by 5% or CPI. And remember, this is may, it doesn't have to be. GST, obviously, we've got all of that sort of stuff. IP rights, the intellectual property rights in the licensed property, any works created of that are the sole property of the licensor, or the licensee shall not acquire any rights. So even the licensee works on it, and adds to it, is still going to be owned by the Family Protection Trust, which is absolutely crucial. Obviously, confidentiality, indemnities there between the parties in case they stuff up. And of course, they've got to make sure there that they abide by, you have to be in repute. So licensor may terminate this agreement immediately by giving right notice if the licensee breaches a material term, goes bankrupt, all the typical stuff there. Alternatively, you can have just 180 days written notice, both ends. So when we have a look at that, force majeure, and then we just essentially go down, we've got the signing pages governing laws. So the licensor, you've got your name, John Smith, phone number, licensee, operative date. This is all the licensed property here. If you want, you could always you could always attach this to all the manuals, etc. if you want, by way of a soft copy. But alternatively, just put in there, as long as it's easy to understand and readily identifiable. Support services, technical marketing support. The initial fees, we've got $1,000 there you can see, which is payable on 12th of February, $2,000 a month for license and support services, and then other fees not applicable, but you can put in other fees there. So for example, I could put in there, so other fees, I could put in there like $3,000 if I wanted to do that. So that gives you an idea of the product that comes out. As I said before, we'll link that in with the assignment of property, or you can just use that license agreement. But from our perspective, it's just another step, another cog in that moat for the client. And I think that's absolutely crucial, is that we're starting to build and protect our clients, particularly around this intellectual capital, intellectual property space, which is very easy to move around. But look, we'll come back in a few weeks' time, and I'll have a look at both ends of the transaction, because we've only just got it up. I'd love you to play around with it, think about it from your clients, come up with any questions, put them up on the support centre, and we'll come back to you. Anyway, that's enough from me today. Thank you all for turning up, and this will be recorded and sent out to you today with the slides as well. And look, it's been great to doing that. Yeah, so, no, sorry, there's a good question here is if the license can be cancelled if the licensee brings it into disrepute. So if I go there, that's a really good question. So let me just go down, I'll go up as determination. So we've got the waiver. Okay, notices, force majeure. Okay, so the licensor may, okay, termination reason. So licensor may terminate this agreement immediately by giving notice to the licensee if the licensee breaches a material term. And one of the material terms there is that you'll see up above that they must ensure, so the warranties for the licensee. So it's a good question. So go past GST and we have a look at the warranties by the licensee. Warranties will comply with all applicable laws. And also here, you'll see the licensee obligations must adhere to ethical business practices and best industry, must use only current versions of any licensed property, and must not bring into disrepute the reputation of the licensor. But notwithstanding that, at any point in time, you can put in there the termination. You've got the licensor may terminate this agreement without cause by giving not less than 180 days of written notice to the licensee, provided fair compensation is paid. So if we have a look at that, that's exactly where we are at. George Elias, if we use the Moat and Castle to create this or any other set of documents, is it possible to still finish this document and come back and use the same? Absolutely. So what I do, George, is when I go into the Moat and Castle, which is my preferred project management tool for working with any client, then what I do is I go through and even if I've only put in half the material, rather than going in and saving along the way, my preference is just to finish, because once it's finished, it goes into the vault and you can go back and you've got unlimited times you can fix it up, which is also crucial because, you know, if there's any changes, so let's say we've got this licensing agreement and we terminate, we can always go back into this licensing agreement and use it again or start another one for another client if you want to license it out to a third party. So the Moat and Castle is really important, a workbook there. And as I said, we are going to bring in wills, SMSF wills, and also during powers of attorney for spouses. And we will put this assignment and also license up there as well. So is there a question here on the website to use to complete these complex planning scenarios? Not as yet. We have for all the estate planning side. We have for the protector. For this one, we haven't gone down the track, but I will do a data capture there. But I do know Tim and I will be coming back and building some quite strong questionnaires there for us, but more importantly, that front end, why you would be doing this for the client. And the more you see, the more you come along to these sessions, the more you're going to get out of them and you're going to start thinking about it. Again, I find the best thing is that because this is all asset protection, think about your own business. Now, what's in your own business if you own 100% that should really be sitting in that family protection trust? Because that's what it's all about. If you do it yourself, then your clients are actually going to listen to you and do it accordingly. Anyway, thank you very much for today. It's Grant Abbott signing off.